Good morning, viewers, and a warm welcome. Sage here. You're watching Kalkine TV live from Sydney. This is the Global Markets Roundup show, and in today's show, we'll explore the latest updates from the equity, currency and commodity markets from across the globe. Let's firstly look at the US markets performance. US stocks rose and the 10-year treasuries were flat. Oil prices fell as markets assessed mixed signals from the corporate earnings and economic growth data. Stronger than expected profit reports from the US companies in recent weeks have ratcheted up already high Wall Street forecasts on how second quarter earnings growth will look versus last year. The benchmark US indices closed higher on Tuesday, August 3rd, boosted by gains in healthcare and technology stocks and optimism about strong quarterly earnings of the blue chip companies. The S&P 500 was up 0.82%. The Dow Jones gained 0.80% and the NASDAQ Composite Index rose 0.55%. The small cap Russell 2000 was up as well, 0.37%. Investors appeared to have ignored concerns about rising coronavirus infections in several US states as they parlayed in stock bets. And according to Refinitiv data, overall earnings of the S&P 500 index are expected to rise by around 90% in the second quarter compared to 65.4% estimated in July. Healthcare, energy and industrial stocks were the biggest gainers in Tuesday's session. Communications stocks were the bottom movers. And 10 among the 11 major sectors of the index stayed in the positive territory. And according to data released by the New York Federal Reserve on Tuesday, consumer demand for new debt and credit card use rose in the second quarter compared to the figures in the pre-pandemic period. Total household debt surged by $313 billion in this June quarter to $14.96 trillion, and the data showed those significant rises in the figures. The mortgage debt rose by $282 billion, up to $10.44 billion in the period as well. Another data set released by the US Census Bureau on Tuesday showed that the pace of economic recovery is steadily decreasing, although the recovery is on track. New orders for manufactured goods surged by 1.5% to $7.4 billion in June, topping analysts' estimates. In the corporate news, French pharma major Sanofi SA agreed to acquire its US messenger ribonucleuc acid, and for short, mRNA development partner, Translate Bio, for $3.2 billion. It would allow the company to improve its mRNA technologies and join the league of the world's top-selling COVID-19 vaccines. Shares of Translate Bio surged more than 29% in the intraday trading after the development. And moving on now, fashion brand Ralph Lauren raised its annual revenue projection for the fiscal 2022 by 25 to 30% on a 53-week reported basis, and following its substantial gains in quarterly sales. In addition, the company's net revenue increased by 182% on a year-to-year basis to $1.38 billion in the quarter ended June 26th. After its earnings report, shares of Ralph Lauren ticked up 7.37% in the intraday trading. Also making the news, American global manufacturer and marketer of consumer and professional products, the Clorox company shares plunged more than 8%, reporting its fourth quarter earnings on Tuesday. Its revenue declined by 9.1% to $1.8 billion from $1.98 billion last year, while its bottom line came in at $97 million or 78 cents US apiece. Over now to the crypto world. Coinbase Global decreased by 2.25%, while Bitcoin slipped by 3.48% and Ethereum slipped by 6.22%. Let's now take a look at the futures and commodities market. The gold futures were down 0.48%, silver increased by 0.06%, while copper fell 1.18%. The Brent oil futures decreased by 1.02% and WTI crude was down 1.39%. Moving across now to the bond markets, the 30-year Treasury bond yields were down 0.48%, while the 10-year bond yields ticked down 0.15%. The US dollar futures index increased by 0.01%. So this was the latest from the US markets, and now it's time for a short break, but please stay tuned. When I come back, we'll take a look at the European markets.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
sectoral coverage or industry news,
we cover it all on our news segments.
Be on top of the latest news
with Kalkine TV.
Welcome back, viewers. Thanks for joining us. Sage here. You're watching Kalkine TV live from Sydney. This is the Global Markets Roundup show. And let us now take a look at the European markets. Strong earnings updates from heavyweights including oil and gas company BP and French multinational investment bank and financial services company Société Générale drove the European stocks to a record high close on Tuesday, although gains were capped by concerns over the rising Delta variant cases and China's regulatory moves. And after dipping into negative territory earlier, the region-wide Stoxx 600 index ended up 0.2% at a record closing high, and the German blue-chip DAX index is marginally down by 0.10%, while the CAC 40 benchmark index of France was up by 0.90%. Let's now take a look at the UK market's performance. And the FTSE 100 trades in the green, supported by positive results by the major companies. And the top gainer amongst the blue chip index was oil and gas company BP, which was up by over 4% after the company reported profit came better than market expectations. And meanwhile, the mid-cap focused FTSE 250 was also up by 0.31%. Britain's Health Ministry has made specific changes in the United Kingdom National Health Service coronavirus tracking app after concern was raised by the business community over the staff shortage because of self-isolation. At present, the NHS mobile app trace contact dating back 5 days and ping the people when they come in close contact with someone who has tested positive. And under the new changes, the app will trace the contact dating back just 2 days, which is expected to reduce the staff shortage problem and major businesses' disruption in the UK. And this is how the European markets performed. It is time for another short break, but after the break we'll take a look at the Asian and the Australian stock market, so stay tuned to Kalkine TV.
Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. Kalkine's Tech Beat has the latest in what matters in the world of technology. Join me every single Monday on the Tech Beat, exclusive to Kalkine TV.
Thank you for joining us, viewers. Sage here, your host. You're watching Kalkine TV live from Sydney. This is the Global Markets Roundup show. So let's now take a look at the Asian and Australian share markets performance, starting with Japan. Japan's Nikkei index closed lower on Tuesday as rising cases of COVID-19 weighed on sentiments, while video game makers fell after the Chinese media labelled online gaming as spiritual opium. The Nikkei share average slid to 0.5%, while online game producer Nexon's 3659.T dropping 6.51%. And moving across now to China's market. Chinese blue chip index was unchanged on Tuesday, but chipmakers led a decline in tech shares amid mounting regulatory concerns. The blue chip CSI 300 index was flat and the Shanghai Composite Index lost 0.5%. And moving on from China across to the South Korean market. South Korean shares ended higher on Tuesday, driven by chip giants and buying by foreign investors, although gains were capped by concerns about the Delta coronavirus variant and its impact on the global economy. The won gained while the benchmark bond yield fell, and the Kospi ended up 0.44%, following a 0.65% gain on Monday. And the Australian shares are on the open higher side on Wednesday after Wall Street peers closed on a strong note in the overnight trade, led by gains in Apple and healthcare stocks. In addition, the Australian domestic mining firms may trade higher on the back of firmer commodity prices, and the benchmark ended down 0.2% on Tuesday, with miners and energy stocks leading declines. And on Tuesday, the Reserve Bank of Australia announced tapering its bond buying program, leaving the cash rate at a record low of 0.1%. Australia's heavily populated states such as Sydney, New South Wales continue to remain under lockdowns, and energy stocks such as Woodside Petroleum and Santos could be under pressure on Wednesday. The gold miners, including Newcrest Mining and Northern Star Resources, could also trade lower on Wednesday. And meanwhile, the most active iron ore futures on the Dalian Commodity Exchange for September delivery closed 2% higher. We do appreciate your company on that report, but that is all for now. And stay tuned with Kalkine TV for more of the live market updates. We'll be back with more news on the markets, economy and diverse themes and sectors. Sage signing off for now.